Good morning, ladies and gentlemen. My name is David Rodriguez, quantitative strategist for Dailyfx.com, and today we're going to talk about Dailyfx Plus, one of the best value-added things that we offer as a firm. Obviously, I'm a little biased because I work for Dailyfx, but you'll see in a second that these are really unique tools that a couple of them you literally can't find anywhere else. So I hope you learn to appreciate them as much as I do. And I'll apologize in advance. My throat is a little hoarse. The desert air is kind of killing me, but I'll try and do my best. Before we get started, I'm required to, and I prefer to start with a risk disclaimer. You know, you've been to enough of these that you know that this is a risky market. But on a personal level, you know, if I were infallible, I wouldn't be standing here right now talking to you. So please do your own homework before you trade. And, you know, obviously I speak about things that I believe in, but at the same time, I'm a human being, and I'm not the end-all and be-all of this market. So, what's Dailyfx? Or Dailyfx, obviously, is our research side, our research website. It's free to everyone. It's one of the major FX portals. And it's great because we're able to publish a lot of articles about different things in the market. You know, frequent updates, you know, weekly forecasts, technicals, you name it, it's on Dailyfx.com. But, you know, because of the article format, we found that there's like a niche for something much more intraday, much more, I don't want to say exclusive, or it is exclusive, but a place where we can basically offer much more intraday insights on the markets and keep you much more up to date than we can in article format on Dailyfx.com. So we can break Dailyfx Plus into 4 different sections. And I won't lie, my favorite ones are SSI and trading signals, so I'll leave those for the last. But at the same time, the technical analyzer and the real-time news feed are also quite good. So the technical analyzer, you go to the Dailyfx website, click on trading signals. On the left, you'll see the technical analyzer. And all this is a good complement to the twice daily technical reports that we release. So obviously, you know, Jamie in the morning, or Joel Kruger posts his technical article in the morning. Jamie a little later. You know, if you want to see what's going on more intraday, you can go to the technical analyzer, click on individual currency pairs, and you'll see what market analysts think about, you know, let's say the Euro-US dollar or the US dollar Swiss franc pair on an intraday basis, with support and resistance levels and a general trading bias. So this is a nice little tool, especially because it offers things like, you know, a good summary on top, short-term bias, medium-term bias, change, and, you know, nice little insights about different currency pairs. This is one of the charts that you can clearly see that the support resistance levels are marked. And obviously, the arrow is helpful to let you know what this analyst believes is going to happen in this currency pair. Another nice little feature of the technical analyzer is if you follow a couple different indicators, but obviously you can't have 15 charts open at the same time, you can follow indicators like the 20-day moving average, 50-day moving average, the crossover between those two, the MACD, and Bollinger. And this will basically tell you exactly what signal these popular indicators are giving at that moment. It's a nice little tool because it lets you keep track of a lot more things that you can possibly have on your screen at the same time. At the same time, we offer the same style of product for candlesticks, but to be fair, as a programmer personally, I can tell you that candlesticks are pretty complicated to actually quantify. You know, it's always a bit subjective. I do express a little bit of caution when you're reading about candlesticks from an automated machine. Despite being a programmer at heart, I really believe that the human eye is so much more intelligent than, you know, 100 lines of code or 1,000 lines of code can ever be. So this is useful, don't get me wrong, but always look at your chart to really confirm that this is the candlestick that's going on. And obviously, you know, if you don't know candlesticks, the And the automated system will give you the opinion based on that candlestick, based on the period, and based on the candlestick formation. So this is a nice little helpful kind of overview of a bunch of different markets. You'll notice that we also have things like Brent crude oil, treasuries, S&P 500, so it's not at all limited to FX, which is actually pretty useful for the FX trader. Next on the list is something definitely exclusive to Dailyfx. This is our real-time newsfeed. So I was talking about how the Dailyfx.com article format is great when you're talking about medium-term outlook, short-term, or more medium-term outlook. We can get really in-depth, show you a lot of charts, show you a lot of information. The only handicap is that, let's say that non-farm payrolls is coming out. It's going to take me a good 20 minutes to write something up about it and publish it. In the meantime, I'll go to the real-time newsfeed, me personally, you can see me right here, and I'll start writing about what's going on for the non-farm payrolls report. And I'll personally also start writing about the trading signals, which we'll get to in a second, and also the SSI. So this is definitely a nice little tool, especially because right now it's free to everyone. Eventually we'll make it exclusive to Dailyfx Plus. But to get this kind of news feed, you're literally going to have to pay a couple $100s a month to get non-farm payrolls results 5 seconds after the event. So you can already see that this is a nice little compliment to our website, because let's say that Jamie in his article this morning wrote that he thinks that the euro-dollar is going down at this level. Well, Jamie will often get on there and write, all right, well, if you read my technicals, this is the level at which I'd like to go short. And you can definitely pick our brains, because it's built on Twitter, and you can go on there and send us messages. So it's a nice little way to interact with us. So again, this is Dailyfx.com. I'm showing one of Jamie's charts right here. You go from here and you go to the real-time news feed, and you can get much more up-to-the-minute insight on these specific currency pairs. So the next section, and arguably my favorite, or my second favorite on here, is the speculative sentiment index. And I got tons and tons of questions about this. And I really think it's one of the best things that we offer as a firm to the trader for just general direction in the market. So if you come from another market, you know that there's no volume in Forex. There are a number of clearinghouses, there are a bunch of big interbank feeds, but there's no one place where Forex trades. And as such, it's really difficult to get kind of volume information that you can in other markets. This gentleman here was just telling me that he analyzes volume. Well, you can't get that in Forex unless you have something like the SSI. Another great thing about the SSI is that it's a really great gauge for market sentiment. Not only to give you an idea of where things are trading, but what actual traders actually think about the market. And just like an open pit, you can see the SSI and see where a lot of people are positioned and really get a good sense of where the market might be heading. So I want to show you one of the reasons, or this is a classic example of why I like the SSI so much personally. And to be fair, it's a little bit cherry-picked because it doesn't always work this well. But this is a concrete example that actually worked. And so if you go back to when the euro was trading at a lowly 124, traders all of a sudden switched the net short the euro against the US dollar. Now the important thing to know about SSI is that we use it as a contrarian indicator. So if everyone's leaning in one direction, we actually want to go in the other direction. In this case, you see that markets went net short the euro at about 124, give or take. And they stayed net short the euro until it literally hit about 155, at which point they started to buy. Had you taken that contrarian signal to go long the euro, when they first flipped to net short, you're talking about almost 4,000 points in potential profits. Perhaps more impressively though, so the SSI didn't work here. Why? Because the market essentially wasn't going anywhere and the crowd was picking tops and bottoms. You'll notice that the SSI doesn't work as well in range-bound markets Because if everyone's buying something that's cheap and selling something that's expensive, then if you're sticking to a tight trading range, it's not going to work. It didn't work as a contrarian indicator because they bought at 155 and sold closer to a couple hundred points higher. The thing I want to point out, though, is that if you followed the SSI here, would you probably lose money? Yes. But right when the euro tests 160 for the second time and comes back down, well, the thing to know is that they've been short, the market has essentially been short for a really long time, and all of a sudden you see people aggressively buying the euro. That's a really big shift in sentiment. And sure enough, you see the euro see a substantial breakdown. Had you caught this, had you caught it when the ratio hit above 2 here and then covered about 1,500 points later here, you obviously could have made some pretty substantial gains. Again, you'll notice that in the range trading environment, when the euro is essentially trading in a 500-point trading range, the SSI was not a good contrarian indicator because everyone's selling at the top, buying at the bottom. So if you go to Dailyfx Plus, you get to see the SSI twice a day and in an attractive and useful format. And to describe the SSI ratio, here you see a bunch of numbers. Generally, the number can be positive or negative, and all that means if more traders are long than those are short, then the ratio will be positive. So right now, at the time that I took the screen grab, the euro ratio is at 1.27, which means that there are 1.27 traders long for every one that's short. And one of the things I really like, the open interest chart is nice to look at. I honestly don't use it in my own trading. What I do use a lot is the daily changes in longs and shorts. So we'll talk about a couple different trading strategies for the SSI in a second, but what I'll tell you is that a lot of the time, obviously the absolute level of sentiment, if everyone's really net long, that's really important. If everyone's still net long, but in the past couple of days they've been selling aggressively, well, that's also something to pay attention to. So right here we see, for instance, that in the US dollar Canadian dollar pair, short interest, or the number of traders short, rose by a substantial 73%, which really tells me that, the crowd is going heavily in this direction. I may want to look for a long position. Again, you see the SSI ratio is right here. You see it for all of our major trading currency pairs. What I will like to note is that for pairs such as the Australian dollar and New Zealand dollar, we don't have quite as much open interest. So I tend to use these a little bit less than I will pairs like the Euro-US dollar, which is by far our biggest trading pair, the sterling yen, which is also one of our biggest trading pairs. So that's something to keep in mind, that although the Australian dollar and New Zealand dollar SSIs are useful, I wouldn't necessarily trade off of them, especially actively. Again, you see this open interest chart and the daily percentage change in longs and shorts. Now, the most common question I get about the SSI, how do I trade with it? Obviously, that's the most important part. I don't want to just talk and not leave you with anything actionable here at this presentation. Sure enough, we offer the Dailyfx Plus trading signals, leveraging the power of the SSI to really show you what it can do and show you trading ideas based on the SSI. So if you go to the Dailyfx Plus trading signals page, again, click on trading signals on the left tab, you'll see a couple of alerts, or the alerts for the signals, trade details, basically the whole, all of the information that you can find about the trading signals and what they're doing, broken down by currency pair, with entries, stops, limits, depending on the system. And this is generally a very appealing and easy to read format to view the signals. So I'm talking a lot about using the SSI, and also another, the biggest question that I always get about this SSI, how do I trade it? Another big question I get about the trading signals, what do I do when one is long and the other two are short? We'll talk about that in a second. First, I'd like to talk about specific trading systems and how they use the SSI, if at all, and how they basically trade the market. So we have 6 systems. 2 are solely SSI based, Momentum 1 and Momentum 2. They don't use any technical indicators except to set stops. They trade 100% off the SSI. So when someone asks me, how do I trade the SSI? I say, look at Momentum 1 and Momentum 2. Now these systems are a little different. I'll talk a little bit about that now. So Momentum 1 is a longer term trading system that basically looks for sentiment extremes. In this chart, you'll see the Canadian dollar against the US dollar and see that the SSI has grown to substantial extremes on a number of occasions. And sure, well, obviously I'm going to pick an example where this works, but sometimes it doesn't, let's be honest here. But at the same time, you see that, you know, when the US dollar, Canadian dollar pair is in a downtrend and markets are really net long, the Momentum 1 trading system is going to take the opposite position and go net short. So again, Momentum 1 looks for that extreme in sentiment. It only cares about the absolute or the relative value of the ratio and trades like that. As such, you can imagine that if you're waiting for sentiment to get extreme, it might be a little slower to enter the market. And it's something to keep in mind. Momentum 1 only works really well in extended trends, such as we see with the Canadian dollar right here, that it breaks 106 on its way to parity, and you know the SSI stays very heavily net long throughout. Momentum 2 is the other purely SSI-based system, and the key difference is, and notice that this was a daily SSI chart, and now I've gone to an hourly SSI chart, and that's telling in itself. Momentum 2 is a little more nimble. It's going to be faster in the trades, faster out of the trades, but sometimes it'll get a little carried away and start buying and selling when the trend is still in the opposite direction. What it does is it trades the changes in the SSI. So if we go back to the Canadian dollar chart, you might see that, for instance, traders are heavily net long, and they're still very heavily net long here. I mean, the ratio shows that there are almost 2 traders long for everyone that's short. But for instance, the level of short interest jumps substantially right here. The red line is short open interest. The green line is long open interest. So Momentum 2 might actually look at that and say, all right, well, they may be net long, but in the past 24 hours, they've been selling really hard and covering their long interest. And this makes Momentum 1 Momentum 2 a little bit faster. And it definitely is a little quicker to the party, a little quicker to get out, and it'll do a little bit better in slightly range-bound markets. It's a trending system at heart, but if I had to choose between Momentum 1 and Momentum 2 when markets aren't really going anywhere, I would definitely side with the latter because, like I said, if you're waiting for sentiment to get extreme, that probably means that prices move substantially in one direction. If it's going to go ahead and reverse, obviously that's not going to be a very good trade. So those are purely SSI based. It's no coincidence that I went to a basic price chart for breakout 1 because it's purely technicals based, purely price based. It doesn't use SSI in any form. So all breakout 1 does is wait for lulls in volatility, and then when the market subsequently breaks out, then it will go in that direction. So for instance, you know, let's say that the system senses that the sterling yen hasn't really gone anywhere here. And it says, all right, well, volatility is really low. I'm going to watch for the next breakout. Let's say when price breaks substantially, then it will trade in that direction. And it's probably our shortest term trading system because it'll get in and get out very quickly, very short profit targets and very short stops. Though to be perfectly honest, it doesn't have the SSI behind it to give it that edge. So the system that does trade breakouts and does use the SSI is breakout 2. If you've gone to the trading signals page, you see that breakout 2 has consistently been an outperformer in the past year or so of trading. And this isn't to say that breakout 2 is infallible, of course not. But it's one of the systems that I especially like because it is extraordinarily simple and leverages the power of the SSI really well. When I say extraordinarily simple, I mean this thing is literally buying when the currency pair breaks its 24-hour high, selling when it breaks its 24-hour low. The edge comes in when you look at the SSI and say, all right, well, it might have broken its high, but is the SSI telling me it's going to continue in that direction? And that's exactly what breakout 2 does. I can tell you, for instance, that this has had a fairly good track record with the sterling yen. because it's definitely one of those more volatile currency pairs, and you can kind of start seeing that market conditions matter, currency pairs selection matter, and you definitely want to get a good sense of what these trading systems actually do before you commit anything to any of these ideas. Finally, we have two range trading systems. Range 1, purely price-based again. This is literally not as colorful, literally and figuratively, not as colorful a chart as the SSI. And range 1 is probably our longest term trading system. It looks for substantial deviations from medium-term to long-term means in select currency pairs and goes in the opposite direction. So it's kind of a mean reversion strategy. It's kind of a strategy that requires patience, but over the past few years, it's done reasonably well. So it's something to keep in mind, especially if volatility is low, especially if price really isn't going anywhere. Range 1 may be worth a look. Range 2, again, we're flipping to a more colorful chart because range 2 uses the SSI. Now, breakout 2 uses the SSI as a directional filter. Range 2 uses the SSI as a trending filter, we call it, because it trades a very basic oscillator. So an RSI, stochastic, what have you. The edge, again, comes in when you look at the SSI. So a couple slides ago, I showed the Canadian dollar, and when the Canadian dollar was moving a lot, the SSI ratio was very extreme. That in itself, the SSI ratio being extreme probably means that price is moving a lot. You don't want to trade an oscillator when price is trending. So what we do with range 2 is tell range 2, all right, look at this oscillator, but only take the trade when the SSI is not at extremes. So for instance, this is a good example right here. The market's relatively range bound, and the SSI shows it because it keeps on flipping from net long to net short almost every day. And sure enough, had you traded an oscillator here, you probably would have done reasonably well. And this is the kind of market environment that range 2 looks for, so it can use the SSI, again, in a slightly different format. But already you're seeing that, obviously, I'll talk forever about the SSI, but it really is a nice little tool that I like quite a bit. Another critical question, so those are the 6 trading systems. Once you get a good grasp of how they work, you can definitely get a good grasp of when they should be working. We put a couple of tools on here to help you make that decision. So obviously, when you see things like this, range 2 is long, momentum 1 and momentum 2 are short. What are you going to do in that situation? Obviously, you'll pick which system you think will do best, but how do you know that? Personally, the most simple thing, again, I'm a programmer at heart, but the most simple thing is to look at a chart. If the thing is hitting new highs, hitting new lows, you probably don't want to trade a range system. If markets are extremely volatile, you probably don't want to trade a range system. On the flip side, if the market's going absolutely nowhere, you risk getting chopped out in trending strategies such as momentum 1 and momentum 2, because they'll buy when sentiment is heavily in one direction, which in many cases in range environments is when the price is about to reverse. All right. So right here on the trading signal screen, we put little things like trend. This is obviously not an especially intelligent indicator. It just looks at the past 1,000 hours of trading and tells you whether or not this thing is setting new highs or lows, and just gives you a quick visual of, maybe you don't want to trade against the trend. In this case, the trend is down. Momentum 1 and momentum 2 are down. I would say, more often than not, it's probably going to do okay. Another thing, and I went to slide one second early, the most important part for me personally in deciding which system to follow at any given moment is volatility. So this volatility indicator right here is based on FX options implied volatility, or volatility expectations across one of the largest over-the-counter markets in the world. So it's a bit beyond the scope of this presentation to talk too much about implied volatility, but what I will say is that it's really, really difficult to anticipate exactly how volatile a currency or anything will be. The thing I like about implied volatility is that people are betting on this, making trading decisions based on volatility expectations in FX options market. So when you have money on the line, you tend to, know what you're doing. And this is exactly why I like volatility expectations. So when you see this bar right here, I did a fair amount of research, for instance, on range 2. Range 2 does not work well when volatility expectations are in the top third, the top third of their range in the past 1,000 bars. And this volatility indicator will tell you, all right, volatility is a little too high. Markets are expecting this currency pair to be really volatile. You probably don't want to trade range 2 or range 1 for that matter. And I would personally look to trade things like breakout 2 or even momentum 1 and momentum 2. I will say that the trending strategies are a little bit more difficult to time. Range 2, in my experience, really lends itself to timing based on volatility expectations. Whereas momentum 1 and momentum 2, they're a little streaky. You can kind of get a sense of they're in a groove, they might continue, but it's a little bit more difficult in my experience to anticipate a trend than it is to anticipate sharp currency moves. So those are the tools we provide to help you decide which trading strategy to use on Dailyfx Plus. On Dailyfx.com, I personally write an article every Monday morning talking about the different trading strategies and talking about personally what I'm looking to trade in the coming week in terms of the trading strategies. So if you go to Dailyfx.com, you're going to see on Monday mornings that I'm writing about volatility expectations, trends, and general strategy preferences. So you'll notice here that, for instance, volatility is very high on the Euro-Canadian dollar, or across the board for the euro against the Canadian dollar, Swiss franc, and British pound. And that's also true for the sterling, Swiss franc. In this particular case, volatility expectations are super high. I wouldn't look to trade anything, or I might look to trade the momentum strategies, but I'm primarily looking at breakout. Because like I said, if markets really expect that this currency pair is going to break, I'm not looking to sell the high and buy the low. I'm looking to buy when it breaks, sell when it breaks down. The trend, again, is a little trickier. The trend, I primarily go off of the trend percentile, but it really comes down to a discretionary decision on my part. And like I said, I'm definitely not infallible. So I can't vouch that those will be as accurate as, let's say, the volatility expectations, but I like to look at a chart and see what's going on in the currency pair. I get a general sense of what the trend is doing by looking at the percentile in price. Right here, this tells me that the euro-US dollar is basically in it's nearly its bottom decile of the past 90 days in closing prices. So you can pretty clearly see that it's in a downtrend. For things like the dollar against the Swiss franc, it's at 50%. And in this case, I said trend, but I might be looking at a shorter term chart that says that, all right, well, it's in the middle of its quarterly range, but on a 240-minute chart, 4-hour chart, the thing is setting new highs and lows. So it's these kind of discretionary decisions that go into deciding this. At the end of the day, you have to make your own trading decisions, though. I'll put this here to provide a general guideline based on my own experience with the trading strategies. But at the end of the day, if you're better at timing trends than I am, which you very well may be, by all means, completely ignore what I'm talking about. I just want you to get a general sense of what these trading systems do before you commit any capital, before you really take the plunge, let's say, and put anything on the line. So that's the presentation. This is probably the presentation that I get the most questions on because we're talking about trading signals. So I'd like to open the floor to questions, and I thank you for attending. Right there. No. So the question, two-part question about the volume and the trend indicator. So the volume indicator, I've personally never really studied this. This is gonna vary per time of day. When traders are trading a lot, the volume indicator or the volume bar here will be high. I've never really found any link between that and trading system performance. So that's why I didn't really mention it, and I concentrate more on volatility expectations as far as these trading systems are concerned. The second question was whether the trend arrow varies if the positions are long or short. No, this is not the most intelligent indicator right here. It basically tells you whether price is in its bottom 25th percentile or top 75th percentile in the past 1,000 bars of trading. Good question. I didn't cover that myself. This is based on the past 90 days of trading. So if the currency pair is setting new lows, this will be the trend percentile will be at 0. I didn't talk about this either because I don't want to bog you down with a little too much information. But this isn't the volatility percentile is the same style. I look at the past 90 days of trading. Thank you, and I say that volatility expectations, or my little function tells me the volatility expectations are the highest they've been in X amount of days, or in the top 75th percentile in the past 90 trading days. And this is important because, again, I don't want to get too much into implied volatility. I do have an FX options seminar a little later that I'll talk about implied volatility more in depth. But for instance, implied volatility can remain high and low for a long time. So it's kind of like momentum 2 looks at the shifts in sentiment. I like looking at the shifts in volatility expectations because that tells me that markets are expecting this thing to move a lot more than it has in the past 90 days or a lot less. So again, this is one of my favorite indicators in deciding which trading system you can actually use. In order, right here on the left. The question is, when I get in the morning and I look at this information, what really sticks out to me? I haven't hidden my preference for volatility expectations. So if I see that FX options markets are betting on big moves in specific currency pairs, then I'll definitely take that into account. And that's probably what's going to draw my attention first. This is especially important for systems like Breakout 2, which is, again, I'm not going to hide my preference for Breakout 2 because it's been one of the more consistent, not perfect by any means, but it's been one of the more consistent performers. So when I get in the morning and I see volatility expectations are sky high for pairs such as the euro, Canadian dollar, I'll take that into account and I'll say, all right, well, watch out for breakout. Stay away from range because, again, I've looked at the range 2 system specifically and it doesn't do well when the volatility percentile is basically in the top third of its recent range. The question is when this thing, or essentially when this says, or at the top, the alerts section says that the trade was entered 40 minutes ago, and this says hold, don't go into this position now, or this says enter now. What does that mean? That's a very good question. So all that really is saying is that momentum 2, for instance, has very specific parameters in which it will enter a trade. So for instance, if everyone's been selling and the selling is basically near its peak, or near its peak as it relates to the past few days of trading, then this will say enter now because the conditions are met for a momentum 2 sell position in the euro dollar, and this was triggered at 35.50. This is something I didn't necessarily talk a great deal about, but these are systems that have been trading on in one form or another on proprietary trading accounts for FXCM for literally about 4 years. Breakout 1 is probably the newest one. But for instance, systems like Momentum 1 and Momentum 2 have a couple years behind them. The important thing to note, though, is that on our proprietary systems, like I said, this purely trades off of SSI, so it doesn't look at anything else. So on our proprietary systems where we have live SSI data, we don't use stops or limits for momentum 1 and momentum 2. One of the things I'll always say, always use stops and limits, or always use stops at least, because you literally never know what's going to happen. So even if you put it, unbelievably far away, just put it there as a precaution, just in case the market decides to move 500 points in the opposite direction. Now, the reason I mention this is because, like I said, on a proprietary level, momentum 1 and momentum 2 do not trade with stops and limits. We would never give you a trading signal without a stop, however. So the important thing to note here is that this has a couple years of track record, but it doesn't have the best track record when we're artificially imposing these stops and limits. Why? Because, like I said, even as a programmer, I recognize that the human mind is better at making these decisions about stops and limits, looking at a chart and saying, all right, well, I trade with Fibonacci levels. So this is hitting the 61.8% Fibonacci level. I want to place my stop 30 pips away, or what have you, or, this is telling me to put my stop at 34.40. 34.40 isn't a level of any great importance. So I see 34.20 is a much bigger support level. I might move my stop there. What I'm trying to get at, and what I hope you take away from this, is that we really want this to serve as a general guideline to the market. So if you want to trade with the SSI, you look at these strategies, and you can see the results that you hypothetically would have had in the past 60 trading days at the bottom of this page if you just blindly followed these. But at the same time, I want you to look at this and tailor it to your own system. One thing I never ever like doing is giving trading recommendations, because I have my trading style. I'll hold a trade for a couple weeks at a time. If I'm saying I'm going short euro, maybe you're trading on a 15-minute chart and you're looking for 50 points with a 20-point stop. I'm looking for a couple hundred points with a couple 100-point stop. The reason I mention that is that I never want to tell someone sell euro because they don't know why I want to sell euro. I can tell them, but it's like saying that someone told you to sell, but you haven't spoken to them in a while, so you don't know if they still think it's bearish. Obviously, that's not ideal. When this tells you to sell, I want you to look at your own trading system, trading strategy, and say, all right, based on my risk parameters, based on how I like to trade, I like the general direction. I think the euro can continue lower, but I'm going to format it in such a way that I feel comfortable money management-wise. A lot of the comments I get is that the stops on momentum 1 and momentum 2 are very wide. This is especially true on momentum 1 because, like I said, it goes for a couple, or let's say, the best momentum 1 trades go for a week at a minimum. So if you're holding on to something for a week, you can't place a 50-point stop because the thing can move 50 points in the next 20 minutes. So that's definitely something to keep in mind when you look at these systems. Question?
For your technical analyzer, what does code generate, correct?
The question is whether the technical analyzer is automated. Things like this, the candlesticks, are. The actual intraday insights, these charts are not.
Okay, so why do they come out? Why do they come out always after the fact? After the trade is already basically already into the 10 points and all the rest of it.
The question is why does this information come after the fact? It doesn't necessarily. I mean, sometimes, or yeah.
Well, I'm on the East Coast. I think it's somebody after 3 o'clock in the morning, and is it based off of London?
Yes, this team is based out of, or actually France, but they're in a European time frame.
Okay.
Question?
Yes. In this section here, I've been following this for a while. It's been very impressive, actually. But my question is, they always have their preferred targets and also their ultimate target for that one. What kind of indicator or how do you actually hone in on the charts for the day to kind of get an idea of which direction it's going to be going instead of
The question is, how do you decide things like this, support resistance trade, or was that the question? Or
how do you decide what? The thing is, these targets
Okay, the question is, I understand it now. The technical analyzer team will often give a preferred direction, but they'll also give an alternate direction. How do I decide which? That is the end game. that is what we're trying to figure out. So in short, based on experience, based on your own trading parameters, there's really no specific to the technical analyzer. There's no answer except to know that use your own guidelines. You might look at the SI, you might look at other information. In terms of actually using the technical analyzer, though, it really has to come down to your own discretion. Question in the back? The question is, how do you tell how old or new the alerts are? You're speaking of the trading signals, correct? So if you go to the trading signals page, you'll see at the top of the screen, sorry, let me get back there. At the top of the screen, you'll see an alert when the system is first triggered. But that's a good point. If you just look at the trade details, you're not going to know. The only thing you really know is what my opinion is more important, whether it says enter now or not. And you can basically guess where the trade was entered by looking at the level. It says sell the euro at 135.45, and these systems always use market orders. So this signal triggered exactly when the euro was at 35.45. To answer your question. Yes. The question is, how often do I update this? I typically update it every Monday. If market conditions warrant, I'll update it later in the week if something changes dramatically. But as a general rule, I only update this once a week. And the reason I do that is I could definitely do it every day, but things, in my opinion, don't usually change that much on a day-to-day basis. My strategy bias will tend to remain consistent for weeks at a time. Oh, on the actual report? That's a good point. I will. Yes? So the question is, if you've missed a signal, which will definitely happen in fast-moving markets, what do you do? Do you look for alternates, or is there a specific PIP target or a general target that you'll use? It completely depends on the trading system. So for instance, breakout 2 scales out of position. So it'll set multiple profit targets and multiple stop losses, so you can get a good sense of how far it expects the market to go. In short, I would personally, again, I like looking at these for direction. I wouldn't necessarily follow these blindly. You can see the results. If you had followed those blindly for the past 60 days, these would have been your results. But at the same time, I think the human mind is a little more intelligent, can time markets a little tiny bit better. So to answer your question, if the trade is already in, but you believe that the currency pair is going to continue going in that direction, then you can definitely take that decision. Let's say that the decline stalled and it went short 50 pips ago. Well, maybe you want to look at a good new entry level, a new stop level, and again, look at this for general direction, but use your own trading style, your trading techniques to actually place trades. Are there any further questions? Well, I thank you all very much for attending this presentation. I wish you the best of luck trading. Thank you so much for coming to the FXCM Expo.